What's up, Ichimoku traders? Chris Capri here, SecondSkiesForex.com. So welcome to an updated and kind of redone, rethought version of the enhanced TKX setup. This is part of the strategy section. So this is focusing on using a particular strategy. And I spent some time thinking about this, and I really wanted to offer a different kind of, a different version of the enhanced TKX that I spent a little more time thinking about. And, there was a couple issues that I felt like I wanted to solve or improve upon. And I felt like after meditating on this, I was able to come up with a way to do that. And so I'm really excited to work with this because I think it solves a fundamental question about if we're taking the TKX or the Tenkan Kijun Cross setup. One of the biggest things has been, how do we trail it? And I felt like the methods were good, but then they would leave a lot of money on the table. And so I spent a lot of time thinking about it. And I think when we talk about it, you're going to feel like, wow, this is actually a much better method. And I feel it does a much better job of trailing and capturing larger portions of the move when we get these kind of big type trending moves. So what we're going to do is start off by talking about the methodology. We're going to talk about just the basics behind it, time frames, what it incorporates, what we're working with. And then we're going to talk about entry parameters. Then I'm going to show you some examples. So I'm kind of following the same format. I show you entry parameters just so you can kind of get the idea. And then I'm going to give guidelines, general guidelines for how to place your stop loss. The take profit is going to be pretty straightforward. So that is going to be, I feel, something that's pretty effective. But yeah, so then we'll kind of talk about stop loss and take profit and talk about the last few tips, and then we will wrap this up. So let's go ahead and begin. So the enhanced TKX, the methodology behind it is we're really taking a very classical Ichimoku strategy with context. So that means that we're incorporating the 5 lines and we're incorporating the wave structure as part of this overall context. Now, this methodology is going to need a basic wave structure in place. So we're going to need to be part of some sort of N wave structure for this to even qualify, which I'll explain more once we get into some examples. In terms of the time frames, it's working on the same time frames that we work with throughout the rest of this course. Weekly, daily, 4-hour, and 1-hour time frames. There's no changes to that whatsoever. The entry methodology on the enhanced TKX is very straightforward. We're only taking medium and strong crosses, which are favorable or reverse turns. So favorable is a bullish turn, and reverse turn is a bearish turn. So only medium strong crosses to the upside and medium strong crosses to the downside. The Kumo context has to be supportive. That means that we won't be getting into them until the price action is above the Kumo for a favorable turn or below the Kumo for a reverse turn. And it's also got wave structure support to this. These details right now will start to make more sense once I go through some actual examples of the entry conditions. So let's go ahead and get in. Okay, so we're looking at the chart of the plus 500 stock. They are actually a brokerage, which I recently bought some stock in, and I really like this brokerage. They're super well run. They have a great management team. It's just a really well-run company, and their numbers just continue to go through the roof. I had a chance to buy it several hundred pence ago, and I didn't, and it's just skyrocketing, and I feel like it's just going gangbusters, and I feel like this is something that's got a lot of long-term potential. So it's one of the first times I've had a chance to really invest in a brokerage stock that I felt like, hey, these guys are doing all the right things. So anyways, let's go ahead and get into this. So first off, medium and strong crosses only, doesn't matter the time frame. So let's start with this one right here. I kind of want to start with this down one and work our way forward through the bullish ones, and we'll kind of go through all the different crosses. We'll talk about entry parameters first, and then we'll go from there. So first off, After we get a medium cross, in a strong cross, we don't have to worry about the Kumo being supportive because we're already below the Kumo. We already have a bearish strong cross below the Kumo, and you can only get that generally if the price action is below the Kumo. So when we talk about medium crosses, the first thing we have to have is once the cross happens, we need one candle, the first candle to close after the cross happens. So if the cross happens on this candle, then on the close of this candle, we are going to be getting in, assuming we are below the Kumo. That's our entry condition. In the strong cross, we are already below the Kumo here. So we don't have to worry about it being below the Kumo. We are literally getting in on the close of this candle here. And I'm just going to go through some entries, and then I'm going to rewind the charts and go back through the stop losses and the take profit. So this is a weak cross, so we're ignoring it. This one is a strong cross, but it never clears the bottom of the Kumo. In fact, it exits out the top of the Kumo, so to me, that kind of invalidates it. If we get a medium cross, but then it goes on the other side of the Kumo, in my opinion, that invalidates it. So it's kind of like this cross happens, it's pending, exits out the other side, boom, invalidates it. Then we have a medium cross right here. This candle closes above it, so we're getting in on the close of this candle. We have some massive runner here, by the way. And then we have a weak cross here, so we're ignoring that. We get another strong cross. So close of this candle right here, I believe. And then we are, so that's that trade right there. We have a weak cross here, so we're not taking that one. And then we have this one kind of here, which is kind of like a gap-like trade. If the cross occurs because of a gap, in my opinion, I'm generally less interested in taking that trade. That doesn't mean I wouldn't want to take the trade maybe because we're breaking a wave structure here, so maybe a potential wave one entry or something like that. But in my opinion, I generally don't like to take trades that have these gaps like this or the cross occurs because of the gap, because it generally takes time to incorporate that volatility, the change of momentum through the Tenkan, the Kijun to catch up. So I personally am passing on this one here. Weak cross here, no signal, strong cross here. Probably this candle is the one that closes above it, so we're getting on this the close of this candle here, and then we're in a massive run here, and so now we've broken up and made new all-time highs. I mean, I had a chance to buy like high 12s, low 13s, and I missed it, and sucker just took off. I mean, that's like a 33% gain in just like 2 months, which is insane. So those are various entry setups on it. Now I want to start talking about stop loss and take profit. And so let's go back. Okay, so on medium crosses, these are the ones where you're going to have general guidelines. They're not going to be fixed rules like you're only putting your stop loss here, or you're only putting your stop loss here. You're going to have to use a little bit of your skills based upon these guidelines on how to do it. Strong crosses are a little bit easier because we have a little more clarity in the context to work with. The medium crosses are the ones that are going to probably be the more challenging ones in terms of putting a stop loss. So let's take a look at this one here. We have the cross, it closes below. What are our options for placing a stop loss? You have the option of placing it above the Kumo. You know, this close is pretty close to the Kumo, and the Kumo is not super thick, so we could place it on the other side of the Kumo, which I think is workable. We could place it above the price action here, but I think that'd be a little high and far away for my opinion. And if we got back above the Kumo, I really wouldn't want to be in this trade anymore at that point. The other option is, you know, with the Kijun being flat here, we could put it just above the Kijun if we want to. I would not put it, you know, like just inside the Kumo here, because when you get medium crosses, there can be a tendency for the market to, you know, sometimes push back into the Kumo, find resistance, and then sell off. And so I wouldn't want to put it, you know, so close to it within this space here. I would put it above the Kijun, or I'd put it above the Kumo here. There are other circumstances where we would want to put it above the price action, but just think about it. If it's really far away, most likely it's not the best option. You have to look at the 5-line context and the wave structure to kind of determine, hey, what would I want to do here? You know, we have an A, B, C, D. So we break this with one candle. I don't know if I want to go above the D point, but the C point here, I definitely would want to go above that. So, you know, we're incorporating 5-line context and wave structure context into the mix. For a strong cross, this is much easier to work with. So in this case, we have a couple options, and I should probably start drawing some things here. So with a strong cross, Tenkan crosses below the Kijun here, or this is a reverse turn. So a strong reverse turn here. You have the option of putting it in this region. Let's just say this is it. So you have the option of putting it in this region, or you can move it to somewhere around here, but you really shouldn't be on the other side of the Kumo. You know, here or maybe a little bit up here, but it just seems ridiculous if you're on the far end of the Kumo. That would defeat the whole purpose of it. Plus, if you look at this, A, B, C, D, I really wouldn't feel the need to go above the C point in this case. So you have a few options there. You're going to have to use some of those skills for this. There is no perfect answer for this. There is no fixed answer for this. That's why I'm giving more general guidelines. Think of it like how a basketball player, you know, if he's coming down the court with the ball, he's not running a fixed program every single time. Okay, I'm going to pass to this guy, and then I'm going to do this and this. No, he's looking at his skills. He's reading the environment, and then he's saying, okay, based on the context of the players and their position and everything, I feel like I have a few options here, and here's what I'm going to use. And eventually those skills will get more and more refined over time. In the beginning, you should probably go for a little more conservative stop, but as you get 50, 100 plus of these trades under your belt, you're going to start to get a lot more refinement in your stop loss placement. So think of it as more general guidelines, not fixed rules. Let's see here. Let's go through a few more, and then we'll talk about stop loss or take profit, which will be so easy when I kind of explain it. You'll be like, duh, that's easy. So here we have a medium cross, and in this case we have a really thin Kumo. You know, here's your entry on the close of this candle right here. So in terms of when I'm thinking of options, you know, I could put it below the Kumo, but that's, you know, we still kind of have this kind of C point pullback here, A, B, C here. So I'm thinking put it just below this little C point here, you know, somewhere like in that little region right there. That would be, in this case, my decision. And, you know, that's where I would probably put it. This one is a strong cross. So I'm looking for that kind of region below the Tenkan and Kijun and somewhere in the early stage of the Kumo. So that's my stop loss on that one. This one is a gap one. I'm not trading it here. This is the entry. So we have the cross probably on this candle here, with the close above it. So that's our entry. Now this one is a fair amount of distance from the Kumo, and it's a medium cross. So in this case, I'm looking to not be too far away. So I'm probably in this region right here. I wouldn't want to go here. I think it's too low. Plus I should get some sort of support from these. If the market pulls back to these kind of A, B, C points here, I probably should get some support in here. So somewhere in this region right here is where I'm placing my stop loss, maybe a little bit lower, but that's about it. It's a generalized region. So that's kind of how I am placing my stop losses in this one. Now, the take profit is super straightforward. Let's go back to the beginning. Medium cross, how do we take profit? Well, I've noticed many times that, you know, in a high momentum move, a Tenkan can be decent because it stays on one side of the Tenkan for a while, but what you're doing that is you're really just trading pure momentum. And as soon as that high voltage momentum kind of recedes, the Tenkan's no longer going to hold. Yet you could get a corrective pullback. You could get a very shallow wave pullback, and then the market continues down. So you're losing a lot of profit on that one there. The Kijun also can often get violated. And so sometimes, again, you'd be losing a lot of profit on this one if you got kicked out here. And then I started thinking about it, I'm like, wait a minute. If the market is really making a pretty strong trending move, what are my other options? Chikou crossing the price line. So you start to count 26 candles ahead. That's about here. So literally when the Chikou has a single candle close crossing the price line, that's how I want to get out of it, because that's going to capture a lot of the momentum, especially in this move here. I mean, think about it. If you're getting in here, your exit's right around here somewhere. That's you're catching the largest portion or a huge portion of this move. Take a look at this one here. The Chikou doesn't break it till about here, because 26 candles is right about here. So we close on the other side of it. Bam. That's a huge move. And so on the right trending moves, I feel like a majority of the time, the Chiku crossing the price line is going to be a really good trailing stop. That's what I spend a lot of time in. I'm like, God, Tenkin, sometimes there's so many situations where it's too tight. The Kijun sometimes will get just crossed by a little bit, but then the market continues. Case in point, we get a shallow pullback across the Kijun, then continues on. But the Chiku, if the market is in a really good trending move, and assuming the counter trend move isn't super sharp, the Chiku should capture a majority of the move. So I feel like this is a fantastic way to use 5-line context here. Here we have a shallow move. Chiku crosses it here, so you really don't make a whole lot of profit on this one. This one is the gap one that I'm talking about. This one here, your entry is, I believe, on this candle. So you're actually still in the move here because the price line hasn't caught it. So you've caught a massive plus 30% move here. So I feel like this, in terms of using 5-line context, is one of the more effective methods to really capture a lot of the move in a momentum move. Now, I wanted to kind of go over some of these on the Euro Swiss because sometimes the Euro Swiss can be, somewhat choppy like this here. But really what I wanted to do is kind of use the Euro Swiss to talk about an important tip. So besides this strong cross here and this strong cross here, look at these huge swing moves you have here. Boom, boom, boom. What are they? They're all weak crosses. Weak cross, weak cross, weak cross. And so this is something that is very, very important to understand. A weak cross on a higher time frame in most cases equals a medium to strong cross on the next lower time frame. So that big trending move that we had on Euro Swiss here, let's kind of mark it so I kind of give you something to work with here. That happens right about here. It's a weak cross. And let me put a vertical line there as well. Watch what happens when we start to look at this on a 4-hour time frame. The 4-hour time frame has a medium or strong cross here. So now you are able to capture this move by going to the next time frame lower. Again, this is a super important point. Weak crosses with big, kind of swing moves on higher time frames are often medium and strong crosses on lower time frames. And so you're thinking, you're looking on the daily and you're like, man, this is a really good move. I'd really like to get into it. Well, you can. That's what the next time frame down is for that. So it's a super important tip on this one here. So that's pretty much it. It's not super complicated at all. It's pretty straightforward. And I felt like, man, this was such a good way to kind of configure and rebrand and redevelop this enhanced EKX so we can capture more of the moves by not getting kicked out early. We can still have relatively similar filtering patterns and really just use such a classical setup in my opinion, a more efficient way. So again, just like all the other videos, practice first, ask questions later. So how would that work out with this? First thing you want to do is go through your charts on the 4 time frames and start spotting a bunch of the entry conditions, and then post those charts in the forum and say, hey, is this an entry condition? Is this an entry condition? This is an entry condition. And once you start getting the feedback that you got that down, then we can start playing with the stop loss placement on this, saying, okay, now I want to go through those same charts again. Here's where I'm thinking I would place my stop loss. Here's my first choice, and here's my second choice. What do you think? And then I'll start giving feedback, and eventually you'll start to assimilate the information and the patterns and the ideas and the thinking to eventually where it becomes a skill. So you'll be able to take that on and be able to make those decisions yourself. So again, after this video, take some notes, watch it again, then start spotting some of the entry conditions, post charts, practice that. Then we can start working on stop loss on this. So practice first, ask questions later. So with that being said, I hope you enjoyed this video. I'm super excited to kind of bring this new version of it out. I feel like when we start having these big swings in the market, you're going to start capturing some really big moves. I'm just super excited about that. So I look forward to your comments and questions. I look forward to your charts in this, and I will see you inside the course.